Now back to our top story tonight, that Charles Schwab is reportedly in talks to buy rival TD Ameritrade in a deal that would create a massive brokerage and asset management company. So what would this deal mean to investors who have accounts with either of these companies? And what happens when your broker is gobbled up by another company? We join now Reed Fraasa. He's financial planner with Highland Financial Advisors to get us some answers here. Welcome back. Good to see you again.
Good to see you, Bill. Sue, thanks for having me.
Nice to see you.
Now, again, this deal hasn't happened yet. But even if it were to be announced, let's say tomorrow, customers wouldn't see changes for quite a while, right?
That's right. It takes quite a while. Full disclosure, we're an advisory firm. We work with both of them.
Okay.
So it affects the institutional side and the retail side. So, yeah, this is probably likely to happen, and we think it would be a very strong fit for the two companies. They both have strengths in both areas. So for the average investor, what's probably going to happen is similar to what we saw happen about 2 years ago when TD Ameritrade bought Scottrade. Right. So the lawyers get together, they got through regulations and legalities, and eventually they close the deal. And then you have the back offices working on, the technology integration.
So if I have an account with either one of those two firms, what differences might I see? What changes might I see? So
Schwab, we believe, is buying TD Ameritrade primarily for their technology and the assets. Zero commissions. They have to find other ways to make money. Right. Basically, these companies make money off, cash accounts. So it's in their best interest to make the retail and institutional customers very happy through this process. As an retail investor, you probably deal with the local branches for your accounts. TD Ameritrade, when they bought Scottrade, they have increased by about 3 times the number of offices. They have one of the largest networks of offices now. So the average person is probably not going to see too much change until after that point when all the technology, because you have a lot of data that has to be integrated, tax, transactions, it all has to be integrated in the back office first. And eventually they'll probably throw a switch. And whoever's the dominant technology player, you will just log in one morning and you'll have a new login.
Very quickly, TD Ameritrade tends to use products that are made by other companies.
Yeah.
Schwab has its own products, its own mutual funds, its own ETFs.
Right.
Who wins in that one, do you think?
Well, that goes back to how they make money. They both took a big hit on revenue when they stopped charging on transaction fees. So for mutual fund trades, you're still going to pay. But they also make money on spreads on bonds, but cash is where they make most of their money. So when they consolidate, they're going to have probably about Schwab will have a 40% increase in their assets. If interest rates start to go up again, they have a big windfall. So they're in a great position. The good thing for investors is with that additional revenue, it's likely that free trades are going to remain.
Well, we certainly hope that's the case, that's for sure.
Yeah.
Reed, always good to see you. Thank you for joining us.
Thank you very much.
Reed Fraasa with Highland Financial Advisors.